Long-term answer, because it's not a thing that can be written. There is a limited amount of it. So as you know, the last bit of Bitcoin will be mined, struck, or made in the year 2140. That's why we know there will be 21 million Bitcoin. That is the end number. It's fully decentralized around the world and it can't be changed. That's why it would be a great tool to have on hand. There is a strong upward trend in the Bitcoin market. Bitcoin recently hit $66,000, which was its highest level since July 31st. This rise is part of a larger increase in risky assets that shows investors are feeling more confident again. Analyst Miles Deutscher says that Bitcoin's growth will likely continue, which could push the price up to $81,000 as more buyers seek out digital assets such as stocks and altcoins. More and more people are interested in Bitcoin, which is a good sign for the future of cryptocurrencies. Recently, Anthony Pompliano talked about the bright future with James Lavish, co-managing partner at the Bitcoin Opportunity Fund. They talked about how the market could continue to grow. Bitcoin's long-term chances look better than ever as it becomes more widely accepted and new ideas are constantly being added to the field. Investors are starting to see how valuable digital assets can be as part of a diverse portfolio. Based on how the market is moving right now, this could be the start of a much bigger wave of people adopting cryptocurrencies. Now, let's watch some clips from the interview to learn more about what James Lavish and Anthony Pompliano talked about. Please give this video a like, subscribe to the channel, and turn on post alerts to get more special videos. Have fun with the movie. The rate of inflation has stopped for the time being. It used to be 9%, it stopped for about 2.5 to 3%. Things are staying the same there. That's why, because those two forces are now working against each other. Could you explain why you think Bitcoin will solve this issue? Long-term answer, since it's an asset that can't be created. There is a limited amount of it. Yes, you read that right. The last bit of Bitcoin will be mined in the year 2140. There will be 21 million Bitcoin, that much we know. That is the end number. It's fully decentralized around the world and it can't be changed. This is why it would be a great tool to have on hand. I think it will take some time for central banks to understand this. Next year, this won't happen. Trump says he wants to put it on the balance sheet as a cash cushion. There's a chance it won't happen. There will have to be laws and a lot of fighting. If he wins, it might take all 4 years. That's more likely to happen in the future. Smaller central banks like El Salvador will likely do the same thing and add it to their balance sheets. So, what's good about that? It's because it can't get bigger. Going back to the gold standard before Nixon took us off of it would be like that. And those charts show that inflation, growth, and the money supply all go through the roof. They go up very quickly after 1971, when the gold standard was officially taken away. So we would go back to a time when you couldn't just print more Bitcoin to pay off your bill and to make inflation to control it. So it's a good thing because it will keep prices low. We just hold on to the hodl mindset in the Bitcoin community. Do not spend it. It's your escape from what's going on here, so don't use it. Also, if this whole system does fall apart, you want to be in something that can't be changed, taken over, or boosted away from you. But once that model or system is in place and people are actually using that as money, like using Bitcoin as money, I don't see why people wouldn't spend money. You don't get to gain from the growth and progress of technology every single day, right? It's not like you're going to keep it too. We're trying to fight inflation by saving money in banks and buying stocks, bonds, and other risky assets. Every day you and I work hard. I mean, I can't spend every single dollar I have every day to live the way I want to. I need to put some away. Because of this, things are, we go through unstable times and so on. That's why we need to hide some. Then how do you save that power? I guess you won't have to worry about that as much now. But a long time from now, you might say, okay, if you're on a Bitcoin standard, it doesn't matter, there are no money bills. No, you're not thinking about it in terms of money. You're thinking, okay, that car costs 0.01 Bitcoin or that house costs 0.1 Bitcoin. You're thinking in dollars. People find it hard to get out of this part because they are so used to thinking of everything in dollars, euros, or whatever. We quote M2 in dollars though, because that's how money works around the world. I do not change M2 to euros. You know that I change money to dollars. We're changing it to dollars because that's how our minds work, no matter where it comes from, Sweden, Japan, or somewhere else. But The system you've grown up with is so familiar that it's hard to imagine something else. James Lavish stressed that the entire financial system needs to be redesigned and that a Bitcoin standard can't be put in place in parts. He thinks that Bitcoin and long-term loans will compete with each other in the same way. Lavish says that institutional investors are putting more money into Bitcoin because they have less faith in the present system. This change gives them a better way to store their money than notes. Stablecoins like Tether make it easier to buy Bitcoin, but they are not seen as direct rivals. People have thought of gold as a safe haven for a long time, but Lavish says that investors are now looking for safety from inflation and monetary growth. The 10-year bond yield is higher than it was before the Fed cut rates, which shows that investors are hoping for better returns. Due to expected inflation, Lavish thinks that 10 to 30-year bond rates will stay high. He says investors aren't thinking about how this will change the way debt is managed in the long run, which could make Bitcoin a much better investment. Here are some more clips from the talk with James Lavish that will help us learn more. The hard part is to think about that system. I agree with you that we should take a step back and think about it. That needs to take place. We will have to follow the Bitcoin standard. You can't be in and out at the same time. I think we could keep going in the same direction for a while. Bitcoin is a great way to store value, and investors are starting to talk about how they're not just thinking about Bitcoin as a separate asset class from stocks, bonds, or even real estate. They believe it is a better way to save money than long-term loans. And when that happens, the whole game changes. When big buyers are putting their money into Bitcoin instead of long-term bonds, why would they do that? It makes sense that they would do that. They no longer trust the system. There is no longer any faith among them that they can put in this long-term treasury and get an interest rate high enough to beat the growth of money supply or inflation and give them a real return. It's a whole different game thereafter when they do that. And I think that's kind of how things will work in the future. There aren't many people I know who think their stablecoin will be worth more in the future than it is now. So what do you think they'll do? Are they going up against Bitcoin? Are they fighting with something like the dollar? No, they're very important right now because you can use them to buy Bitcoin. Well, unless you're buying ETFs, which is a whole different subject, you need to buy something. Once you buy them on a cryptocurrency market, you hold on to your dollars, euros, or whatever you're using to pay for them. And tethers, I was in Congress a few months ago where we talked to different officials like congressmen and senators and taught them about Bitcoin and how it works. They also know that Tether is a big player. Right now, they are one of the 20 biggest buyers of US bonds. It's not going to go away on its own. To keep buying bonds, they need Tether to stay in business. That is significant. It's like a bank. A card inside a cryptocurrency market. It really is what it is. In other words, it's very important for the system. It's not really competitive with Bitcoin. I see it more as a way for people to get into Bitcoin. Gold is often seen as a safe investment, so it could be. Are people going to the gold because they think there's a good chance of a recession? Perhaps. What else? Like what comes after that? Well, that's not what we're talking about when we talk about this huge increase in the money supply. When there is a slump, we expect the money printer to burst, which means that a huge amount of cash will be dumped into the system. That's the first one. Now look back and then go look even further. It's true that the yield on the 10-year treasury is higher now than it was before the Fed cut rate rates.